Tesla Wartime CEO returns. Tesla is set to report its earnings for the second quarter of 2025 tomorrow. And although Wall Street firm Wedbush is bullish, as the company appears to have its wartime CEO back, it is looking for answers to a few concerns investors could have moving forward. The firm's lead analyst on Tesla, Dan Ives, has kept a bullish sentiment regarding the stock, even as Musk's focus seemed to be more on politics and less on the company. However, Musk has recently returned to his past attitude, which is being completely devoted and dedicated to his companies. He even said he would be sleeping in his office and working 7 days a week. Back to working 7 days a week and sleeping in the office if my little kids are away. Nevertheless, Ives has continued to push suggestions forward about what Tesla should do, what its potential valuation could be in the coming years with autonomy, and how it will deal with the loss of the EV tax credit. Tesla preps to expand robotaxi geofence once again, answering Waymo. These questions are at the forefront of what Ives suggests Tesla should confront on tomorrow's call. He wrote in a note to investors that was released on Tuesday morning. Clearly, losing the EV tax credits with the recent Beltway bill will be a headwind to Tesla and competitors in the EV landscape looking ahead, and this cash cow will become less of the story and FCF in 2026. We would expect some directional guidance on this topic during the conference call. Importantly, we anticipate deliveries globally to rebound in 2H, led by some improvement on the key China front, with the Model Y refresh a catalyst. Ives and Wedbush believe the autonomy could be worth $1 trillion for Tesla, especially as it continues to expand throughout Austin and eventually to other territories. In the near term, Ives expects Tesla to continue its path of returning to growth. While the company has seen significant weakness in China in previous quarters, given the rising competitive landscape across EVs, Tesla saw a rebound in June, with sales increasing for the first time in 8 months, reflecting higher demand for its updated Model Y, as deliveries in the region are starting to slowly turn a corner, with China representing the heart and lungs of the TSLA growth story. Despite seeing more low-cost models enter the market from Chinese OEMs like BYD, NIO, XPeng, and others, the company's recent updates to the Model Y spurred increased demand, while the accelerated production ramp-up in Shanghai for this refresh cycle reflected TSLA's ability to meet rising demand in the marquee region. If Musk continues to lead and remain in the driver's seat at this pace, we believe Tesla is on a path to an accelerated growth path over the coming years, with deliveries expected to ramp in the back half of 2025 following the Model Y refresh cycle. Tesla will report earnings tomorrow at market close. Wedbush maintained its outperform rating and held its $500 price target. Source: reposted and summarized from Joey Klender at teslarati.